Welcome to Energetic Incorporated, Episode 3. Today we present a unique look back into the uranium market cycle in an effort to determine where we are today. It's my pleasure to welcome a uranium industry pioneer with over 40 years of experience in the sector. Our relationship started 20 years ago, back when I had a lot more hair and my guest was able to roll into my office with a cowboy swagger. So introducing the founder and chairman of Encore Energy, Bill Sheriff. So I wanted to go back to, I always tell the story of when I meet people or when I first met people like you. So I remember, I see you got a nice colorful shirt on today, and it reminds me, I think when it must have been like, say, 2004? And you rolled in the office, and I remember you were wearing like cowboy boots and jeans and a big belt buckle and probably a black shirt. You often had a black shirt on, Yeah, and you had a story. You had basically a private company and a story of how you had acquired mining leases and mineral rights. Various properties, had been acquiring them for different companies. And you had, if I remember correctly, you had somehow come across or purchased a very large amount of data. And I think you had like either containers or like old 18-wheeler truck beds filled with data from the previous bull market.
Yeah, 4 40-foot containerized shipping units of all paper data from worldwide Union Carbide ventures, which of course Union Carbide was one of the biggies in uranium back in the day. So it was a true case of data mining, not the way you think of it now on computers, but literally going through stinky old files and maps. And we finally got it all scanned in about 2008, but there's still stuff in that database that we're finding that we're utilizing.
You still have that same database? You kept it?
Oh, yeah, it's been a lot of the paper's been discarded, but it's also been scanned at this point.
Oh, cool.
It took 22 people 3 years.
So how did you acquire all that data? Where did you get it all?
I was a stockbroker at the time. One of my clients said, "Hey, my grandpa had a uranium mine in Utah. Can you find out any information on it?" Because she knew I was a geologist as well. And I said, "I'll make a call." So I called Union Carbide. They said, "Sure, come up to the warehouse in Grand Junction, Colorado, and you can look for it." So I think, it's going to be organized, right? So I go up there and spent half a day up there. I walk in, they send a security guard down with me to look through the files. And I walk in, and there's this 3,600 square foot warehouse that's chocked to the brim with filing cabinets. Couldn't open any of the doors of the offices. They were all shoved in. And so I realized then that there was no index. It was going to be impossible to find this one file, which incidentally, almost 40 years later, I still haven't found that file. But, I know it's there somewhere, but I haven't found it. And so I asked the security guard, what on earth are you going to do with all this stuff? And he said, "Well, we're going to sell it." And so I get the idea. Okay, if they're going to sell it, I've got limited time here. I can't afford all this stuff. I'm going to pick 10 filing cabinets and make them an offer in the morning on 10 filing cabinets, $1,000 a piece. And so I spent the rest of the day and put stars on it, wrote down where they were, any identifying marks, and I went in to meet the president of Union Carbide's subsidiary there in Grand Junction called Umetco. And I said, "Well, I understand you're trying to sell that." He goes, "Yes." I said, "Well, I've got an offer for you. I'll buy 10 of those cabinets for $1,000 each, and here's the list." And he said, "No, can't do it. Thank you." And so I get up to walk out, and he goes, but wait a minute, I got a counter offer. I said, "What's that?" He said, "I'll sell you everything in that building for $10,000. I said, "Okay, great, I'll do it." He goes, "Well, there's a catch. In fact, there's 2 or 3 catches." He said, "First off, there's Manhattan Project documents in a bunch of those filing cabinets. And I need all those sorted and made into usable files and returned to us." And he said, "The second thing you got to do is we got radiation health safety records in there from various operations back in the day when they had, company towns, company doctors, things like that." He said, "We want all that used, in a usable file and returned to us. And the big one is I want the building cleaned out from ceiling to floor in 6 weeks." That provided a wealth of data that really, spurred Energy Metals, which is where I really got to know you and Eric Sprott.
I mean, you must have got a chuckle over the years seeing. So we got the 1.8 billion to Uranium One, right? That was what Uranium One paid for Energy Metals. Uranium One got bought out as well, right? That was.
They actually got taken over, not really bought out, but kind of a creeping transaction from the Russians, Rosatom.
These propagandists trying to make it seem like as if Hillary Clinton had sold Uranium 1 to the Russians. And I'm like, actually, it was us. We were the biggest shareholder at the time.
We just had miraculous timing. First to the financing, first round, first to the exit, first really get some momentum. And you don't get too many 17-cent to $17 trips.
And over the years, I've met so many guys with all this data, they get data. They got laid off from BHP or Rio Tinto. Somebody left the country, and they're like, well, can I keep the data at least? They're like, sure, part of your severance.
Yeah. Well, I have to admit, dumpster diving more than once behind some exploration company offices when they were moving. It's just a treasure trove of data, especially in an industry that really was dormant for 40 years.
And what people probably don't understand about the value of what you're doing, and the value that you get when you get this data is it's equivalent to all the cost of all the drill holes in modern day pricing.
Yeah, I mean, Union Carbide spent $200 million of back then money generating the data just on that database.
Yeah, so they spent $200 million. You inflation adjust, so that would have been what time? Well, 1960s, 70s?
Late 60s, 70s, yeah.
Yeah. And so if you were to inflation adjust that and say, how much money did they actually spend on, all the drilling, all the work, it would be a big, big number, like over $1 billion in exploration work.
Yeah, absolutely. And of course, most of that hadn't seen the light of day for many years because nobody cared about uranium.
Yeah. And so you're able to buy the data from, say, $1 billion worth of holes being drilled and sampled and tested and, all put in nicely into files for $10,000 and some labor from some friends.
Lots of sweat equity because it was, in terms of indexed, it was not indexed. It was a mess. Literally, when they put everything in there from the world, they were throwing Australia next to Alabama next to aluminum. It didn't make any difference. There was no rhyme or reason to their sorting. They shut down in a hurry, and literally everything from the whole world ended up being thrown in that warehouse. So it took many years to sort through it. And like I said, we're still finding things. We put a big property that we got out of the Union Carbide database into a sister company, Nuclear Fuels, and kicked that off.
So what is ISR mining or ISL mining? ISL or ISR mining stands for in-situ leaching or in-situ recovery. And it's a process where minerals are extracted from an ore body, typically a sandstone layered deposit down maybe 50 or 100 meters below the surface. And the mining operation is to drill down with multiple pipes into the ore body and then pump fluid down one side and extract it from the other so that the fluid is flowing through that sandstone layer and the minerals are extracted at the surface, and it's just a cyclical process of the fluid flowing around. After that extraction takes place, the pipes are capped with cement. The site is reclaimed.
We don't move rocks. We move fluids. It's that simple. We don't have a tailings pile. We don't have a waste rock pile that are emitting radiation on the surface. We take the whole system on ISRs. You find a sandstone that's underwater, probably 50 to 100 feet minimum, so that you've got a head pressure. And we pump water out of the uranium-containing aquifer. Well, you can't drink it because it's got uranium in it. So, but what we do is pump that out, and then we inject oxygen gas in the same water, injecting it back into the aquifer that's carrying uranium. The oxygen oxidizes the uranium. When it's oxidized, it wants to be in solution, so it goes into the oxygenated water. We pump that to the surface, run it through an ion exchange plant. The uranium jumps onto the resin in the ion exchange plant, much like an industrial water treatment plant. Mm-hmm. You can literally walk right over a well field and you aren't getting exposed to the radiation you would with even a waste rock pile. So when it comes to reclamation, we turn the oxygen off. We run 3 or 4 pore volumes of water through a reverse osmosis, and we're done. That's reclamation.
Tell us a little bit more about how much or how quickly, if you get a permit on a property, how quickly you can be up and running with an ISL operation.
Well, just to back up once, and I'll get there, it's just part of the story, but basically
Sure.
What we do with the data is we eliminate the exploration stage. Somebody else has already paid for that.
What you're doing is you're recapturing the value right away. by just producing, you produce a report, your 43-101 or whatever. Here's your full report. Here's your feasibility study. You're just mining that data. And then you could show the market, look what we have based on this data I have. And this in this lease, which cost not very much.
It's in a big head start. Our first operation at Rosita, we were permitted in 17 months in Texas. We were permitted on 20 months. Second one at Alta Mesa, we were 17 months.
One other thing that I'm going to always touch on with people is, you know the lassonde curve, right? You must have seen that over the years, right? So the lassonde curve is this. What am I doing it this way? You know, the theoretically, right? You make all this money during exploration, right? And then there's permitting and whatever. Oh, and then you have a little dip in here where there's going to be some financing and people realizing how much it's going to cost to build the mine, and then this ramp up into production.
The reality trough.
Yeah, somewhat of a reality trough. Recently, I took that graph, the chart of the lassonde curve, and I chopped it in two spots, which is one nearing completion of exploration, sort of around that permitting phase, and I spread it out, right? And then I showed a drop of 90 to 95%, and then a rebound, and then sort of around the production phase, or even it could be slightly after production, take that curve and split it out and do another drop of probably 80% or more, and then back up again. I often joke with that lassonde curve in the breakup that what most exploration managers don't, the small junior exploration companies, they don't want to tell you is for you to complete this lassonde curve, there's going to be multiple of these breaks, because it's not going to be done this bull market. It's going to take a couple bull markets, maybe two, maybe three, maybe four. It's going to take 5 CEOs and 3 or 4 different companies.
Got to start young.
Yeah. So, but uranium, and especially ISL, and what you've identified over the years is that, I would assume that those properties, typically those leases, how many were they just dropped and you were able to pick up the leases with the data?
Geez, in 2004, Kevin, it was so bad. Uranium had just come off of an 03, $7 a pound. And I was staking things, just going out, pounding 2x2 posts in the ground, getting federal mining claims, back when nobody else was doing it, that were in Cameco, U.S. Energy, Energy Fuels, in their annual reports the year before as resources. And they just dropped them, and it was basically hopeless. And it's in a lot of ways.
And they dropped them because of the cost to maintain the leases, which is so minimal. They just thought they were so bearish that they just didn't care.
It was a total capitulation, and capitulation bottoms are a lot easier to pick than tops sometimes. But I viewed that as a capitulation bottom, and put literally every penny I had, which wasn't very many at the time. I had an old beat up 82 Ford pickup that I've still got outside. And, I had, I think, 50 grand with all my credit limits. And I was actually charging mining claims. And I was all in. If that didn't work, I was going to go flip burgers.
It's my belief that investing with people like Bill, when they've purchased those assets so cheaply, that they're going to capture that rebound in value. Right? The market will come to recognize the value of his data sets, and what the historical work that's been done will be recognized in the market, because prices need to rise such that it justifies others doing that work today from scratch.
I tell people this uranium cycle, we haven't even gotten through a batting practice yet. I tell people that the uranium cycle now is like somebody standing on stage in 1950 telling you, hey, the next 70 or 100 years, oil and gas is where you should be.
Yeah.
And not every quarter is going to be good. There'll be some losses. Not every year is going to be good. I mean, my gosh, your oil went to Katango a few years back, and they'd pay you to take it for a short, brief period of time. So it's not going to be a dream, but I guarantee you, if you'd invested in oil and gas in the 50s, you would have had a way above average return on virtually any time period you looked at it. And this is the same way with uranium. It's the next fuel, if you will.
And I guess it's difficult for the people that have taken this huge hit, especially, like all the uranium stocks, all the uranium juniors especially, have just been cratered in the last, year, despite what looks like a lot of great news. It's like the price is up dramatically the last couple of years. the new builds, the permitting, like for nuclear facilities it's unbelievably how bullish it is. AI and the tech companies saying we're going to support it, but the stocks have gotten killed.
Why are we in a bear market for uranium stocks, aside from the general financial market that's in a bit of chaos right now? And I think it's two things. We have uniquely one of the worst pricing mechanisms available to the public or the investor in terms of price transparency of any commodity on the planet. Maybe plutonium's a little harder, but the spot price is all that people get, and the spot price is such a small, insignificant amount of the uranium that transpires. It's still the only thing people have to look at, and it's even less valuable now than it was, because historically you had two kinds of transactions. You had the spot, and then you had the request for proposals, where half a dozen companies or multiple companies were given a chance to bid on a contract. And then there was a little bit of sole sourcing. But almost all of that request from multiple parties gets reported to the pricing agencies, one way or another. And almost none of the sole source contracting ever gets reported to the pricing agencies. So as more and more of these transactions have gone to sole source pricing, there's less and less price visibility out there. Mm-hmm. And that's the only place you really get it is when a company like Cameco comes out and said, I think here, 6-8 weeks ago, they came out and said, we're still looking at contracts with $70 floors and $130 ceilings. And, if you look at the spot price, you would never guess that. I mean, the floor ceiling high was only 80, 85, and 140.
The whole strategy of the utilities is to contract long term and then try to point to a spot price, which they try to avoid like the plague from buying, so that they can use it as a marker, especially at month end, to say, hey, look at where the price is. This is what we're settling up on. And they could even, who knows? I mean, when you see the way other commodities have been manipulated and messed with, I would have no doubt that there is a lot of funny business over the years in the uranium sector.
It's certainly an opaque pricing mechanism, and you see spot at 60 and not really doing anything. You don't know that the companies that are actually producing are still signing $70 plus contracts. In fact, there was a base price announced by Lotus I think just yesterday at $80. Mm-hmm. So the contracting market's healthy. We aren't complaining.
Well, I think that we should be. I mean, I don't know if you probably remember back in the day, we had a large position, obviously, in every little junior in pretty much every single one of them that had anything reasonable in terms of assets. Yeah. And I was very clear as a shareholder that I was like, unless we should be holding out for $90 floors, and don't give up the upside. You need to preserve this. They're going to pay. We know they're going to pay, but I don't really see that discipline right now in the market where people are really hanging out. A lot of people sort of rush into production because they want to get off this cash burning phase, right? Like you want to get some revenue in, you feel like you need to do a deal. Well, $20 margin is better than no margin, and I want to produce, I got to sell. I guess it's just, it's difficult to hold out for more when they're trying to compete people against each other, and Cameco was out so aggressively contracting.
Yeah, when the big guys are, you look at Cameco's production of 20 some million pounds a year, and you compare that to our objective that we're not close to. Last year we produced 200 and some thousand pounds. We're a drop in the bucket. We were the top one in the U.S. last year, but we're still a drop in the bucket. Compared to what Cameco does.
So where are we in the contracting cycle? Let's try to just, the idea that there's going to be, I always sort of like to say about the uranium cycle is it really comes down to when the utilities collectively wake up, all the fuel buyers wake up and they say, we're going to have a problem 5-10 years from now. And they think really long and hard about it. And then they say, I need a 10-year contract. I need a 10-year. And then there's no 10-year contracts to be had from almost anyone. And so they have to go into this over-contracting cycle because they're like, well, what if this guy doesn't produce, or this guy, what if there's a problem in this country, which we've seen, right? Like, what if there's a problem with, some floods and a disaster, or, force majeure,
Floods have been really important to the industry, at least on the uranium producers. I think that you've got a couple of things. Everybody, including myself, have been dead wrong since WNA in London in September. I think everybody expected a move because it was on the heels of the Russian, mutual non-trading, the embargo, and then Biden saying we weren't going to use any in the U.S. And nothing happened. And that usually, if anything happens, it's after WNA. It didn't happen. The spot transactions have essentially dried up. And I think two things must have happened. I have no insight really. It just appears to me that a lot of that run up when we got up over 100, even though there were only a handful of contracts above 100, there were a lot of trades done in the spot in the 90s, a lot of them. And I've got to think that once it broke to that ground, that a lot of the guys that thought they were going to need some extra capacity or extra material over the next 4 or 5 years jumped in and paid the $90, not wanting to be the guy that set new prices at 110, 115, one whatever. And so I think that eliminated some of the normal. I think you got a concentrated push that you haven't had in years to buy spots. So that took some of the pressure off of the last 12 months that we've seen. So that's been gone. I think add to that, there's a lot of uncertainty about the tariffs. There's a lot of uncertainty still about the Russian thing. Which way is that going to go? And I think there's and add to that the uncertainty over, if the Ukraine thing ever gets fixed, does that mean freely flowing Russian uranium again? And I think, I'll take them one at a time. The Ukraine thing, no, I don't think so. I think the U.S. has learned its lesson in terms of we got to have domestic supply. I think they're going to nurture that. It's going to take one of our biggest problems in terms of uranium in the U.S. is we got no conversion and enrichment. We have some, but not anywhere near what we need or used to have. And that's really what we're relying upon Russia for because, the whole world, not necessarily us, they got 44% of the world's enrichment capacity. So, that's an enormous lion's share of a pretty critical commodity. And the government's going to have to be involved in some sort of public-private enterprise with a consortium of banks to really move that along. In the U.S. to fund this SMR craze. Right now, the only place you can buy HALEU is Russia, China, and Iran. What could possibly go wrong?
Yeah. Well, they've earmarked $2.7 billion for that, but it still hasn't been put to work yet.
It's about 10% of what they need.
Yeah.
Maybe 5%. But, you look at that and you think, oh, that's too big in money. It'll never happen. But then you look at the amount of money Microsoft's putting into the Constellation deal, and suddenly $20 billion is kind of routine.
Yeah, so for sure.
I think it's going to come, but I think things are going to come a couple of years later than people think.
Obviously, the big move came in the last cycle. We had Sprott. It was actually called the Uranium Participation Corp, which is now the Sprott Physical Uranium Trust, which I think you remember. I came up with that idea over a sushi lunch. I was so bullish on uranium, and I just was like, these guys, people aren't paying up, and the cost is going to go up. I was so sure of it. I was like, somebody's got to just step in and buy this and show them where the price should be and sort of, drive this market higher because it makes so much sense. And I think we ended up, we put $20 million, we gave a $20 million lead order and the concept of just create a holding company to Sprott Securities, our sister company at the time, which became Cormark. And they ultimately raised, they had to raise $100 million because we couldn't be more than 20% for it to be in our funds, right? So we said, we'll go up to 20 million. So they came out of the gate with 100 million. And just that alone took the price up like $5-6 back then because the market was already, it had already tightened up so much.
It's a complex situation for sure, but I see that, I just can't see that somebody's not going to step into that gap. And, Spot 1 was incredibly successful and really ignited this cycle. And, there's so much room for Spot 2 to come in as the next stage, if you will. And I can't help but believe somebody's going to put it together.
So, obviously, we're going to hold off. We're going to be waiting for that big move because I think that the big move is going to still come when everyone finds that it's very difficult to contract serious pounds. To get a 10-year contract, the big boys are sold out, and actually, you're going to have to really step in and start participating in the spot market. And then we get that convexity, URM, URNJ, the different ETFs all buying spoot. Money pours into the sector, the exact opposite, right?
So I think you're going to see, we certainly aren't the only ones that are cutting back on or eliminating contracting. So that in itself is going to help create what you're talking about. And the $60 price, keeping people from funding things to get into production, is certainly going to help tighten the supply, future supply of exactly what you're looking at.
Have you ever tried or considered trying to ask for some type of price participation based on the electricity price?
No. That was an easy one. It's an interesting concept, though I actually hadn't thought of it, Kevin.
Well, I just sort of look at it like everybody, when you go to do business, you want to shake hands and you want to say, let's do a fair deal. Let's make this fair for both of us. And I get it. You've got your costs and you've got your concerns and you got, but we're afraid here. I mean, as a producer, I'd be sitting there going, I'm scared of inflation. I'm scared of where the US dollar might go, and you want some type of price stability. Well, I need some guarantee that there's going to be some type of margin plus that's going to justify me doing what I'm doing, because I don't want to be pulling stuff out of the ground and selling it at a loss, right?
Yeah. Yeah, and it's tricky too, because you get the stability of having a certain profit in it versus the greed of having a runaway market. And the investors like the idea of $200 uranium. And I think that's actually another contributing factor to the bear market I forgot to mention. Is one of the big things we've got to is investors always look back and they look at charts, they look at past cycles, et cetera. And the only thing we've got, literally in recent memory, is the 2004 to 7 or 8 time frame. And so that's why you see so much speculation on the boards about where are we in the cycle? It's only a 30 or 36 month cycle. It's like, no, that's what that was. And that was a completely different market. It was not demand driven. Investors have not seen a sustained long-term nuclear cycle, maybe ever, maybe back in the 70s. But that's way beyond anybody's memory in the market. The market's got pretty short-term memory most of the time. So
I always remember that there's a document that circles around every now and then with a chart showing how much power was planned to come from nuclear power in the 70s. I think it was done by a German company, and they were forecasting it to be like, just absolutely massive. Like, there was a lot of people that thought everyone was going to do what France was doing.
Well,
why wouldn't you go to 90%?
In fact, in many ways, we just lost 40 years out of the prediction. Just shove that together, and we're still on that trajectory. We just missed 40 years.
Well, nowadays, it's going to be, I think, one of the things that's still on the horizon is hydrogen power, which, hydrogen isn't a fuel. It's not like you gotta make it. And the best way to make it, the cheapest way to make it is with a nuclear power plant. That's the cleanest and best way to make mass quantities of it. And I don't know if you've seen, like, even Yamaha has a brand new outboard engine that looks fantastic, hydrogen engine that they're developing. And anyway, it's going to be interesting to see. Obviously, you've got the battery tech as well, and that's going to put such a tremendous load on the grid. I mean, you start coming up with numbers, and you're just back of the envelope numbers. I was like, if we try to do that, if we try to go to the level that most of the auto companies said they're going to be at in producing cars by 2035, electric vehicles, you're going to have to double the electrical grid.
Yeah.
And then I started, and already now, and people thought I was crazy when I was saying there's going to be soon people will be saying you need a six-fold increase in in uranium output.
Yeah.
Six-fold increase over the next 15 years. And I'm sticking to that. That's what people will be forecasting is what's going to be needed. And they're already saying 3, right? They've already gone it seems like a lot of the forecasts are saying it's looking like 3 times. But I think it'll ultimately go to 6, and that probably will prove conservative for what.
Oh, no, I agree, and you're just talking about the commercial use. I mean, most people are not aware of, and you see it very little. But the U.S. defense stockpiles, there's a couple of them. They're way below their targeted levels. They're supposed to have 30 years supply or whatever it may be. And with the AUKUS submarine program for New Zealand or Australia rather. And with the Air Force in the U.S. is retrofitting all their S-61 bombs, and I'm not an advocate of making bombs, but it's still a huge consumer of the stockpiles. I mean, they're going to be down to single-digit years of resources left in those stockpiles, and that's not going to remain the same either. I think at some point here, once we're done with all the budgeting, you're going to start seeing defense stockpiles rebuilt in the country as well. I also think, going back to your original idea, I haven't figured out why somebody hasn't put together, SPUT 2. They've come up with a couple of issues in SPUT that, they can only raise money when it's at a premium. So every time it gets close to a premium, everybody shorts it. Not everybody, but some people short it. And sure enough, it backs off. And now that we're in a bit of a bear market in the general market, it's a closed-end fund. And, it's gone to an 18% discount here not too long ago.
I've been buying.
Well, and I did too. But, that's the whole point is that, there's room in there, and I'm surprised somebody hadn't done it yet. I don't think it'll be very long till somebody comes up with, for the lack of a better term, SPUT 2. And they, have a different pricing mechanism in there and have an ability to sell or lend their uranium, things like that. So that
I actually did have originally when I first came up with the idea for Uranium Participation Corp, which became SPUT, I did imagining moving the uranium through the fuel cycle and contracting. I thought it would make sense to build a company that you started off with holding uranium, but you strategically contract to move it through the cycle, and then ultimately you get into the logistics side of things where you're, helping with fuel fabrication and delivery and waste disposal, and offering a turnkey solution for companies. And I think that will come. Someone should do it.
And multiple revenue sources, so you aren't dependent upon the market to allow you to raise funds to continue your acquisition program. So I think it's just a matter of time till somebody does that. And, we've even seen some of the hedge funds that, eventually they get their license, and we've seen several of the big hedge funds with pretty big books go into the contracting business this time. We didn't see that last cycle. We just saw them dump it in the market when they were ready to leave.
Well, it's almost like we should be creating a company and asking a whole bunch of the uranium producers to kick in to help seed this company that will basically act as like an OPEC.
No, I think it's a great idea.
Well, maybe we should look at that. I'll put that on my to-do list.
Well, keep me informed because I think it's brilliant.
What's your strategy? Well, what's your long-term strategy? Are you playing to get to a certain size and asset base for an exit, or are you thinking that you're gonna scale out yourself?
Good question. I think in the U.S. there's room for 2 ISR producers. I think there's got to be mergers. These companies that are our size are going to have to get bigger, or they're going to be gobbled up. It just doesn't make sense to have 5 or 6 ISR producers in the U.S.
So you're looking to be part of the consolidation strategy, and
I think the best way to build a company, regardless of your exit plan, is to build one that's bringing in more money than it's spending, and you build a real company out of it and do a good job of it. And at some point, somebody's going to take appreciation of what you've done, and they're going to come along and offer more than you can say no to. I've done, 25 or 30 successful mergers, not just in uranium, but other industries, other commodities over my career. We rode most of the last cycle together, and like I say, I still think this one's in its infancy. So here we go.
Yeah, me too. We'll chat with you soon.
Sounds good.
Bill talks about investing in the uranium sector as being akin to investing in oil and gas in the 1950s. And I'd go further. I'd say it's like the early 70s when trust in the U.S. dollar was shattered and commodities had a huge decade. That's what we're setting up for. I see the power generation requirements for nuclear power to be growing exponentially, and uranium demand along with it. And that concludes today's podcast. I want to thank Bill Scher for being my guest. Please like and subscribe, and I'll see you next week.